Good morning, dear students. Today we are going to start our session with chapter number 4. Chapter number 4 discuss about stakeholders, ethics and CSR. If you look at about the chapter content, there are 5 topics within the chapter. There are certain things which are new to these subjects compared with the previous syllabus we had. For an example, the ethical concepts. In previous subject, we did not cover ethical concepts, but we cover stakeholders in the previous subject also. CSR was not there in the previous syllabus, but here it has been added. But if you look at about the weightage which is given in the syllabus, so which is assigned in the syllabus, a small percentage has been allocated on this. Therefore, only few pages have been allocated within your study text on this. However, if you look at about topic like stakeholders, that was very popular in the previous syllabus. Especially from the exam point of view, this was tested few times in the exam. Examiner was more focused on area like Mendelov matrix under the stakeholder analysis. Now he is having more freedom to cover some other areas also. Anyway, concept like ethics, I am sure you have covered in some other subject like auditing. So therefore, you may have some touch on this subject, these concepts, that will be much easier for you to grab what is in the chapter. So first of all, we will discuss what is ethical concepts. There are a lot of debates on this. What is ethics? What is moral? Sometimes these debates confuse. They are not talking about one particular concepts. Sometimes conflicting each other. So therefore, we should have a clear understanding what is expected from you in relation to ethics and moral in CA syllabus. You have to remember the definition given here. Do not confuse by reading some other material specially available in the web. Right. So we will start with the definition of ethics. What is ethics? So look at the definition given here. So ethics is a set of principles to guide behavior. Ethics are concerned with what is right and what is wrong. So if you look at about the definitions, it say this includes some of the principles which guide the behavior. So principles that guide the behavior of the people. At the same time it say ethics are concerned with what is right and what is wrong. So it concern about what is right and what is wrong. The next thing is The term ethics tend to be used to refers to what society as a whole views as right or wrong. Very important sentence. Ethic is more broader compared with the morals. Ethics connect with the society. So, ethic refers to what society as a whole view as right or wrong. This is not connected with individual. This is connected with the society. So, right, generally what is society accept as right or wrong, we consider as ethics. As a person, the individual view may be different, so but that is not vital. The more important one is the ethics here, since it connect with the total society. Right. So, what is moral? So, moral tend to be used to describe the principle and individual used to guide their individual behavior. So, moral connect with the principle that is apply with the individual, not with the total society. This is connected with one particular persons. So, if you look at about these two principles, moral connect with one person, ethics connect with the whole society. Moral is a narrative concept, ethic is more broader concepts. But if you look at about the both concepts, they concern whether behavior is considered right or wrong. Both focused on the right or wrong behavior. But remember, what is right or wrong may be subjective terms. It may differ from one scenario to another. Right. So, I will take few examples to illustrate this principle further. Think about a lawyer. Suppose lawyer is having a client. This client has committed some crime. He come and meet the lawyer and try to get the assistance from the lawyer. So, in this scenario, lawyer know this guy has done the crime, right. So, but from society point of view, this is not right, that is wrong. The act done by this guy is not acceptable. But from a lawyer point of view, in his professions, so ethic is whoever come, he has to, right, help him, right. So, in his professions, right, so what he has to do is, he has to represent that guy. So, individual moral is different in that scenario from the society ethics. I think it's clear for you, right. So, with that we will move to the next topic, common ethical problem in business. So, what are the common ethical problems in business? The first one is extortions. What is extortions? Extortions mean requirement of giving some favor to some official to get some work done. This is very common in some countries. If we want to make an investment or if you want to get a project approval, so in that scenario you have to give a large sum to official in that country, otherwise you can't proceed with the contracts. I hope that is not the case in Sri Lanka, right. So there are certain countries, this is very common, country like China, very common situations, right. So this is something which is not acceptable, no, right. That is why we consider under ethical problems. The next one is bribery. I am sure you are familiar with what is bribery, right. So bribery is a small amount of money, no, given for some people to get the work done. So not only in government sector, it may be in the private sector also. I think compared with other countries, I think Sri Lanka is really good in these aspects, right. So bribery, then what is grease money? So grease money also some sort of a bribery, but here only a small amount is given. So you give a small bribe to get the things happening. Whether you give the bribe or not, your work will be done, but if you give a small bribe, your work will be expedited. That is the purpose of grease money. In certain countries, this is acceptable. Things big amount is not involved here. Grease money. Then next one is gift. Now gift even in Sri Lankan culture, I think this is very common, right. So normally to do something, especially when the things are done, normally you may give a small gifts, right, maybe like cake. So this is normally acceptable in many countries. For example, cultures like Japan, this is acceptable because the value is very limited, but still there is ethical concern on this. I know in certain companies this has been incorporated with their ethical principles, right. So even they have defined the amount. For example, I think in the Bribery Act, I think the less than 10,000 valuable gifts are acceptable, right. More than that is not acceptable, right. Then the next one is conflicts of interest. Conflicts of interest. So this is relevant to a situation in which an individual interest conflicts with the interest of their employer. Conflicts of interest. For example, suppose you work as a purchasing manager. So one of your friend will say A4s, right. So for your friendship you want to give the contact to your friends, that is conflicts of interest. Then again question arise with this is ethical act or not. So with that we can complete 1.1 and then we will move to different types of ethics. If we look at about the different types of ethics, we can identify three main types of ethics: personal ethics, business ethics and professional ethics. Personal ethics, business ethics and professional ethics. So we will look at about each one. So what is personal ethics? So personal ethics refers to an individual's personal values and code of conducts. This is relevant to one particular person's. This is his values and the code of conducts. Personal ethics normally guide an individual action in situation that they face in their personal or non-work life. So think about you, what are the personal ethics you have? For example, honesty, integrity and the honesty. Say as I am sure as an accountant you maintain that. So under whatever the circumstance you should not impair your honesty and integrity, that is one of your personal ethics. So fairness, treat everyone in equal manner, take the responsibility, those are the personal ethics you have. Right. Then what is business ethics? So business ethics involve the application of a moral code to the management and conduct of a business. This is relevant with a business. So application of a moral code to the management and conduct of a business. So normally nowadays in a competitive environment, organizations are pressurized in different way, right? So whatever the way you are, right, pressurized, you have a responsibility to act ethically. Nowadays actually a lot of rules, regulations are there. So organizations are pushed to adhere to that actually. Then company code of ethics. So we look at about what are the company code of ethics. So make sure people use the ethics within the organizations. Some companies have introduced some code of ethics. Even in some organizations I have seen a small booklet is there. So everyone has been given that booklet. So you have to adhere also, not only to have the booklet, right. If you look at about this code typically contains a series of statements setting out the organization values and explaining how it sees its responsibility towards stakeholders. So this contains a series of statements which set out the organization values and explaining how it sees its responsibility towards stakeholders, how you want to fulfill your duties toward your stakeholders. If you look at about this code of corporate ethics, normally they have certain features. What are the features they have? They focused on regulating individual employee behavior. So you try to focus the behavior of the individuals, that is one of the things you are trying to do. Then, right, so for example you try to make sure employee behave in a good manner, not in a bad manner. This is a formal document actually. So earlier also I mentioned a small booklet is there, right. They cover specific areas such as gift, anti-competitive behavior. So gift, for example, in what circumstances you can accept gifts and the value of the gift. For example, less than 10,000 amount gift, right. Gift and anti-competitive behavior. Then at the same time employee may be asked to sign that they will comply. Yes, right. So there may be separate statement, you have to sign it and say that you adhere to the code of ethics of the organization. This is very formal in organization. So when you join at the initial point before you start your job, this is one of the statement you have to sign and accept it. I remember in my job also I sign this one and accept. After that only you can commence your job, right. Then they may be developed from third party codes like regulators or use third parties for monitories. So normally you may refer some of the third party document. For example, so what bribery act say, right. So what principle applicable for some professionals like accountant, you will refer those things and accordingly will develop this particular documents. They tend to mix moral with technical imperative. So moral and technical aspect also be considered. Sometimes they do little more than describe current practices. Actually within the environment normally you have these things. If you look at the statement, what is you are applying in the real environment may be documented, only a few addition may be there. They can be used to shift responsibility, right. So, people may try to give the responsibility to the operation level people through this particular documents, right. Then the third element of the ethics, that is professional ethics. Professional ethics. So, what is professional ethics? So, professional ethics guide the personal and business behavior for members of a profession such as accountancy, right. So, in each profession you have certain ethical principles. For example, as accountant we all have some ethical principle to adhere, that is one of the example on professional ethics. So, normally professional code of ethics apply to individual behavior of the professionals, right. This is applicable to individual behavior of the professional, and this is so oftenly based on principles supplemented by guidance on threat and safeguards. It tell what should be adhere by you and what are the areas which give some threat to your profession and how can you safeguard yourself in those circumstances, right. Then we will move to 2.31 content of professional codes. This may vary from one profession to another, right. So, we look at about what about the professional codes applicable for accountants. For example, International Ethics Standard Board of Accountant Code of Ethics for professional accountant, right. So, they will tell what are the main things to be considered here. If you look at about the codes, the first one actually the code begin by stating that it reflects the acceptance by the accountancy profession of the responsibility to act in a public interest. So, code clearly say accountant job is to act right in the public interest. You have to right safeguard the public interest whatever you do, right, that is the starting point. Then the detailed guidance begin with establishment of fundamental principles of ethics. It include fundamental principles of ethics right in detailed manner. Then the guide then supply a conceptual framework that require accountant to identify, evaluate and address threat to compliance. It identify conceptual framework also applying safeguards to eliminate the threat or reduce them to an acceptable level. Those are helpful to safeguard or eliminate the threat to an acceptable level. So, I am sure you learn these professional codes under subject like auditing, a very familiar right area in auditing. So, we do not want to go in depth in relation to this. So, I am trying to identify fundamental principles applicable for accountants. So, you may right, you may be aware on this. At the same time subject like auditing will cover these principles in details, but for my subject right I will just introduce the main concepts. There are 5 fundamental principles applicable for accountants. What are the 5 fundamental principles applicable for accountants? First one is professional competence and due care. What is that? Very important principles, right. So, you have a continuing duty to maintain professional knowledge and skills, right. So, qualifying chartered is not the end, right. So, you have a duty to right continue with the updation in the accountancy professions, otherwise your client will be compromised. So, you have a duty to give your best to your client to fulfill their duty. So, therefore, you have a responsibility to right upgrade your knowledge and skill on continuous basis. That the first principles. A subject like accountants is very common, no. For example, accounting standard change, auditing standard change, taxation laws change, right. So, you should be familiar with them, then only you can give the best service to the client. Then the next one, the second one is integrity. So as a professional, I believe always number one is integrity, for accountant especially. So what is integrity? Members should be straightforward and honest in all business and professional relationships. They should be straightforward. If you want to tell something, you have to tell it clearly, right? So straightforward and honest in all business and professional relationships. You should be honest, very important principles. You should not be, right, biased, right? So every occasion you have to maintain your integrity. Sometimes there may be some threatening factor for your integrity, right? But for any benefit you should not, right, give up the integrity. You have to maintain integrity, right? So very important principles. Then professional behavior. What is professional behavior? So members should comply with relevant laws and regulation and should avoid any action that discredit the professions. So, you, as a profession, you should right, comply with all the relevant laws and regulations. For example, if you are practicing accountant, so you must comply with all the inland revenue laws, especially for clients. When you are calculating or when you are preparing clients income tax assessment, you should comply with regulations and accordingly have to do it, right? So you should not discredit the profession, your profession, very important one. Then confidentiality. So members should respect the confidentiality of information acquired. So when you are dealing with different clients, right, you are come to know about their business activities. So you have a responsibility to right, not to disclose that one to outside parties. I think as auditors, very important principles. You go through all the clients' documents and you know what is happening in there, what are the business secret of them, but you should not disclose this one to third party. Then principle number 5, objectivity. So what is objectivity? Members should not allow bias, conflicts or interest or undue influence of others to override professional or business judgment. So very important principles. You should not be biased and you should not have any conflict of interest, or you should not allow others to, right, override the professional or business judgment. So you should carry out your any assignment with the objectivity, right. So with that I can move to the next ethical threat for employees and managers in business. Again, this is very familiar area in subject like auditing. So what are the ethical threats for employees and managers in business? So there are 5 main threats: self-interest, self-review, advocacy, familiarity, intimidations. 5 threats are there, right. So first of all, we look at about self-interest. What is self-interest? So normally self-interest occur as a result of the financial or other interest of a professional accountant or of an immediate or close family member. So these occur as a result of the financial or other interest of a professional accountant. For example, suppose you have some shares, you have some stake in a particular company, that is a financial interest. Or so you have taken a loan from them, or you want to get a loan from the organizations where you are doing the audit. So these are some of the self-interests that conflicts with you, right. Then next one is self-review. What is self-review? Business decision being subject to review and justification by the same accountant responsible for making those decisions or preparing the data supporting them. So that's very simple thing. For example, your audit firm do the bookkeeping part for the client. Then you are going to audit the client also. Then there is a self-review threat because the work has been done by you, right. Then next one is advocacy. Advocacy කියන්නේ උපදේශයක් කියන එක නේද, උපදේශනයක්. But advocacy, normally advocacy occur when member promote a position or opinion on behalf of a client, right. So when a member promote a position or opinion on behalf of a client to the point that subsequent objective may be compromised. So you do advocacy service for the client, right. For an example, you promote shares of a company, right. You promote shares of a company, that is one of the example. Or you give a good comment about the company in a public event. Those affected to your right independence, you know. That is one of the problem you may encounter as a auditor, for example. Then another one is familiarity. What is familiarity? So when you are dealing with a particular client for a long period, you may have developed a good relation with the client. For example, if you are doing the audit for 5 years, then you may have developed a good relation with the clients. So with the time, with the relationship, you are reluctant to disclose some of the problem with the clients. That can happen. So that is an example for familiarity threats. Then the next one is intimidations. Intimidations. For example, there are some threat for you. If you are not going to do the work properly, right. So there are some threat for your survival. For example, threat of dismissal from employment. Suppose you are an internal auditor, right. So you do audit of one of the business unit. The head of that division is very powerful guy in the organizations, right. So now you have found some material issue, right. So when you are trying to disclose this one, right, that guy threat you, right. For example, right, you will not be given the promotion. For example, that guy may be in the interview boards, very powerful guy. So now right, there is a threat for you, even as an external auditor, right. So you found some material mistakes, but you can't disclose that one because now the client is threatening you to, right, remove you as auditor, right. So that's an example of intimidations. I think it's clear for you. So then we'll move to the next topic. Next topic is stakeholders, right. Very familiar principles and very easy principles. So we'll look at about who is a stakeholder. Who is a stakeholder? Stakeholder, normally stakeholder is right, any party who is having who is having an interest about organizational activities. Any party who is having an interest about organizational activities, normally we identify as a stakeholder. If we look at about the definition, what is the key word in the definitions? Here the key word of the definition is interest, right. So any party who is having an interest about organizational activities, normally we identify as a stakeholder. Look at the definition given here. People and group who have an interest in what the organization does. So again in this definition also interest word has been, right, highlighted. So, if you remember what you have learned in your previous studies, maybe in your A levels, you may remember two different types of stakeholders, internal and external stakeholders. But here we are going to have three types of stakeholder groups. In addition to internal and external, we are going to have another group called connected stakeholders. So, we will look at about the meaning of each party. So, stakeholders can be defined into three groups. What are the three groups? Internal, connected, then external. Internal, connected and external, right. So, here who is internal stakeholder? Look at the definition given here. Internal stakeholders mean individual or group who work within the organization. Here what is the key word? Who work, people who work. Here the key word is people who work in the organization. We emphasize internal stakeholders. What are the example? Management and the employee. They normally work within the organizations. Management and the employees. Then who is in connected stakeholders? Individual or other person or organization with direct link in the organizations. These parties normally have a direct link with the organizations. They are not inside of the company, right, but they normally have a direct link or direct relationship with the organization. Who normally have a direct link relationship with the organization? Example, shareholders, yes, number one party, no. Then customers, they normally purchase the good from the organization. Then suppliers, they provide the materials. Lenders like banks, they provide the required finance for the organizations. The example for connected stakeholders. Here keyword is direct link. They normally have a direct link with the organizations. Then the third group is external stakeholders. Look at the definition of the third group. People or organizations that do not have a direct relationship with the business of the organizations. These parties stay outside the organization, but they don't have a direct relationships. In other words, normally they have a remote relationship with the organization, not a direct relationships. So, parties like government, general public, normally they don't have a direct relationship with the organizations. So, here keyword is do not have direct relationships. Direct relationships. Do not have direct relationships. Right. Then stakeholders objectives. I think at this level no need to explain. What are the objective of stakeholders? So, what are the objective of employees and managers? What is the number one objective of you? A good rate of pay, no? You need a big package, no? Right? So, that is the number one. Not only that, job security these days I think is very important, no? COVID-19 emphasize the right importance of job security. I heard in America so many people have lost because 50% of the American employees are volunteers. There was no job security for them. The world was changing from right permanent job to a volunteer job. But this COVID-19 again, right, tell us to rethink about that particular model, and it emphasized the importance of job security, right. So, even in Sri Lanka I think many people are facing problems, especially in the private sector, right. So, your job is threatened, so no one know when, right, you will lose your jobs. Many people are in a stressful situations, right. So, government sector employees are I think more secure compared to the private sector people when you look at a job security, right. Then shareholders. So, what are the objective of shareholders? So, number one objective of them is profit. They need a reasonable return on their investment. That is the number one objective. Then another one is increase in share prices. So, this is relevant to the listed company. So, they would like to see increase in share prices to get capital benefits. Then customers, what is the other main objective of customers? They want to buy a high quality price, they want to buy a high quality good at reasonable price, right. Customers want to buy a high quality good at reasonable price. So, at the same time they want to buy product which provides status, like BMW, no. Then suppliers, what are the expectations of suppliers? They need to get regular orders for good in return for reliable delivery and good service. They would like to see regular orders for their goods. So, then we can move to the next topic, power of stakeholders. Power of stakeholders. What is power of stakeholders, right? So, here we look at about how different stakeholder group going to influence the business activities. So, how they are going to use their power, right. If you look at the management, how they use their powers, management normally they make decision in a company, right. So, that is the main way they use the power, right. Then employees, how they use power, you know that one, no. One of the main ways taking industrial actions like employee strikes. Then if they are unhappy, what they normally do, finally they will resign. Then shareholders, so how shareholders use their power, they can appoint and dismiss the directors. At the same time they involve in important decision of the organizations. The lenders such as bank, how they use power, so if you are not paying their loans, what they do, one of the things they will do is refuse additional lending. For example, stop giving further overdraft facility for you. Then take legal action to recover debts. If someone has defaulted the money, right, then bank will take legal action to recover the debt. Then suppliers, so they will also take legal action to for late payment. Then they refuse to make further supplies, right. Then customers, how customers can show the power, very simple, no. If customer is unhappy, what they can do, they can stop buying the company product and they can move to a competitor products. Then government, how government is going to use their power. So, government will introduce new laws, right, then take actions against breach of regulations, like penalties, right, then they will change the tax rates and will influence. Then general public, how they are going to use power, they will create bad publicity for the company and put pressure on government to act against the company. They will put government pressure on the government to act against the company. Right. With that, I am moving to 3.3 stakeholder mapping. So, very important topics. If you look at about the previous subject, BBC subject, this was tested in few time. So, stakeholder mapping, to map different stakeholders, right, we are going to use a model. This model is called Mendelov matrix. Model we are going to use for mapping different stakeholders is called Mendelov matrix. Mendelov matrix. Look at the Mendelov matrix. In the Mendelov matrix, we are trying to do two things. The first one is we try to group stakeholders we are trying to group stakeholders based on two criteria. One is level of interest, other one is relative power. In the first things, then the second thing what we are trying to do is, we are trying to identify appropriate strategy to deal with each stakeholder party. Two things actually. If you look at your exam questions, past papers, in many questions there are two parts, A and B. A part cover mapping stakeholders or group stakeholders, right. For a given scenario, you are asked to cover or identify different stakeholders. Then part B, India, you are asked to identify the appropriate strategy in dealing with them, right. So, if you look at about the model, so this model try to classify stakeholders based on two criteria. One is level of interest, then other one is the relative power. Then based on the level of interest, we are going to identify two options. What are the two options we are going to identify? Low, level of interest can be low or it can be high. Then relative power, also we are trying to identify two options. Power can be low or high. So based on this 2 into 2 matrix can be developed, then we can find four options. Four options can be identified. If there is a stakeholder group, right, who is having low level of interest and low relative power, we call that one as a category A stakeholder in this model. Then if there is a stakeholder who is whose power is low but the level of interest is high, we identify as category B here. Then if there is a stakeholder, his power is high but the level of interest is low, we identify them as a category C. If there is a stakeholder whose level of interest is high, at the same time power is also high, we identify that group as a category D group, and such group we identify as a key player also, right. If you look at the category A, look at category A here. So normally their level of interest is low, at the same time their power is also low. So what are the examples? For example, community member, right. If you look at a community member, their interest about business activity is very low, at the same time their power is also low. I am giving this example under normal circumstances. Under special circumstances, this may be changed, right. Then look at the category B, their level of interest is very high but power is low. So what are the examples? Most of the employees of an organization come under that. Most of the employees of the organization come under that. So they normally can be identified under the category B. I say most of the employees, 99% of the employees, but there may be 1 or 2 people who are very powerful. In that scenario, their power is not low, their power is very high, right. For example, CEO power is very high. In that scenario, we will not consider him under the category B, he will be considered under category D in that scenario. But most of the employees normally come under the category B. Then category C, look at the category C, their level of interest is very low, at the same time their power is also, their power is high, right, their power is high. So what are the example? For example, government ownership in a government company. If you look at a government company, government power is high but their level of interest is very low. I am talking about small government organizations. India government is not much interested, right, on their activities. But look at the next group, category D, their level of interest is high, at the same time power is also high, right. Category D, we call them as key players, we call them as key players. What are the example? A major shareholder of a company or main customer of a company, they are example on that, right. So, I have done the first part here. So, by using Mendelov matrix, I map stakeholders or I group stakeholders into 4 groups. Then I told you second thing we want to do here is to identify the appropriate strategy in dealing with each stakeholder group. What is the appropriate strategy in dealing with each stakeholder group? Look at the category A, we look at about category A. So, normally category A, people are not much interested about the business activities, at the same time they are not much powerful in the organization also. Therefore, so what should be our strategy? Do we want to put much effort to manage them? We do not want to put much effort. We have to use minimum effort to manage such group. Then look at the category B, right. Since their interest is very high, when you are doing something, it is better to inform them, then they are very happy. Remember, they also right, if they are unhappy, they may increase their power by perhaps by lobbying. Lobbying means by grouping together. දැන් සේවකයන් විශේෂයෙන් පුළුවන් ඔය වැඩේ කරන්නනේ. සේවකයන් පුළුවන් යුනියන් එකක් විදියට එකට එකතු වෙලා කටයුතු කරන්නනේ. ඒ හරහා ඒගොල්ලන්ට පුළුවන් බලය වැඩි දියුණු කරගන්න පුළුවන්. ඒ නිසා better to inform when you are doing something. Then category C. Category C should be carefully managed. You have to satisfy their requirement. Why? At any time, right, they can move to the category D, right. So, if they increase their interest, then automatically they will move to the category D. That is why you have to manage them very carefully. You have to satisfy their requirement. Category D, that is the most important group. They are the most powerful group. That is why we identify them as key players. So, your strategy should be acceptable. Whatever you do, that should be acceptable to the category D group. Look at this side. This includes what I have stated for you. In summary form, no, you go through that side. Right, with that we will move to the next topic 3.5, stakeholder conflicts. Stakeholder conflicts, stakeholder gatum kinekani. What is stakeholder conflicts? So, different stakeholder group have different interests and these may come into conflicts. Their interests conflict each other. For an example, look at about the interests of shareholder. What is the main objective of shareholder? Shareholder want to get the maximum return from the business. Look at about employees. What is the main objective of employees? Employees want to get the maximum benefit from the organization. They need to get a higher salary and other benefit from the organizations. If you pay more to the employee, then who will be affected? Shareholder will be affected. Shareholder return will be affected. Now see, which conflict each other. Right. Then what are the different responsibilities? Different responsibilities. So we can invite 3 types of responsibilities: economic, legal and social. So organization point of view, what is the economic responsibility of them? So organization want to make profit and give a reasonable return to the shareholders. From survival purpose, right, survival point of view, that the number one responsibility organization want to fulfill. Without fulfilling this, they can't survive. Then after the economic responsibility, next one is legal responsibility. What is legal responsibility? Comply with relevant rules and regulations. For an organization, there are so many rules and regulations applicable. You can't violate them, you have to adhere to them. That is the legal responsibility. In short run, you can survive by violating them, but in long run, you can't survive. Right? Then social responsibility, compared to the other two, is the least important responsibility. So, what is social responsibility? This is similar to the philanthropic responsibility. To be a good citizen and make positive contribution to society and local community. So, you have to be a good citizen in the society. Business is also part of the society. Therefore, you have a responsibility to give a good contribution to society. For example, by spending money on social welfare activities, that is social responsibility. But from the survival point of view, this is not much important. Even though you ignore this one, still you can survive in the business environment. Then we can move to the next topic, management of stakeholders. Management of stakeholders. Now here actually we try to identify some KPIs or indicators which can be used to judge whether we have satisfied our stakeholders' expectations. By using these indicators, we can come to a conclusion whether we have fulfilled our duty toward our stakeholders properly or not. So, what are the different indicators we can use for that particular purpose? If you look at about the shareholders, right. So, what is the main indicator we can use is share price. As a shareholder need to get good return. Right. One of the objective is to see increase in share price. If the share price increase, shareholders can enjoy capital gain. That is one of the indicators you can use. You can see what is the price your company share is sold. If the company share price has been increased, that indicate shareholder expectations are met. Suppose shareholder price, share price has been declined. What do you think? Decrease. That is not a good indicator. Shareholder will lose their money. That means we have failed to fulfill the shareholders' expectations. Then customers. How can we judge whether we have fulfilled the expectation of customers? One of the indicators we can use for that one is the volume of sales. Volume of sales, in other words, sales income. If the sales income has been increased, that clearly indicate customers are happy. Since customers are happy, they have made more purchasing. If sales income has decreased, that indicate customers are not happy with the organizations. Then another indicator we can use is number of customer complaints. Number of customer complaints. If number of customer complaints have been increased, that indicate customers are not happy with the organization. If opposite happen, that indicate customers are happy with the organizations. Then employees. If employees have not conducted many strike, that indicate employees are happy with the organizations. If they have conducted many strike, that indicate employees are not happy with the organizations. Labor turnover, right. So, if your organization is having a higher labor turnover, that indicate employees are not happy. That is why they are leaving, especially with when you are dealing with these young generations, no. A group like Z, the whole philosophy may not be applicable. You have to be different for them, right. So, otherwise these young guys will leave actually. Labor turnover, that is one other indicator. Then lenders. So, how can you measure whether they are happy or not. Their willingness to lend more. If they are willing to provide more loan for you, that means they are happy with the organizations. So with that we can complete topic number 3 and we can move to topic number 4. Topic number 4 mean the corporate social responsibility, CSR. Right, this is debatable concepts. When I say CSR, right, so you may have a different opinion on this. So one of the simple definition of CSR is giving back something to the society is CSR. That is the simplest definitions. Giving back something to the society can be identified as CSR. But if I go for a more broader definition of CSR, look at the CSR definitions. CSR is an organization obligation to maximize positive stakeholder benefit while minimizing the negative effect of its actions. CSR is an organization obligation to maximize positive stakeholder benefit while minimizing the negative effect of its actions. Organization obligations, ආයත තිර බැඳියාවක් කියන එක නේද? Organization obligation to maximize positive stakeholder benefit. You have to maximize different stakeholder expectations while minimize the negative effect of its actions. You should be careful, you should not negatively impact to the society especially, right. Importantly, CSR include economic and legal issues as well as ethical one and reflect the whole range of stakeholders who have an interest in an organization. In broader sense, actually CSR mean organizational obligation to fulfill the expectation of all stakeholders. If I go for broader definition on CSR, I can say CSR mean organizational obligations, organizational obligation to fulfill expectation of all stakeholders right. So in broader sense actually all stakeholders are considered under the CSR. If you are able to fulfill the expectation of all stakeholders, that means you are good in CSR aspects, right. So look at the third point also, we can suggest that companies achieve society's expectation that they are good corporate citizen through their philanthropic responsibilities, that mean social aspects, by giving something back to the society, for example spending money on social welfare activities, right. So then you can become good corporate citizens. Actually if you look at about the approaches in CSR, there are different approaches. This American approach actually more emphasize on the philanthropic aspects. European approach more emphasize on the total stakeholder aspects. Therefore, it's better to cover both aspects. CSR in broader sense, CSR means the obligation to fulfill the expected of all stakeholders and special attention can be given on fulfilling the society expectations. Right. So, we will look at about 4.1 also, corporate social responsibility stances. Right. The first one is Lysian pair stance. What is the Lysian pair stance? Here we only look at about the organization short term expectations. Here we try to fulfill the interest of the shareholders. We are not looking about long term, we just look at about the short term. Number one objective of organization is to satisfy their shareholders. So, what we do is we try to give the maximum return to our shareholders. Only short term aspect has been considered. Then enlightened self interest. Here we look at about the long term shareholder interest. We believe that we can give a more benefit to the shareholders in long run by having good relations with other stakeholders. By managing other stakeholders properly, we can give better value to the shareholders in the long run. Lysian pair look at about the short term interest of the shareholders, but here we look at the long term interest of the shareholders. Then the third one is multiple stakeholder obligations. Here organizations think about all stakeholders, not only the interest about the shareholders. This is more broader. You look at about the all stakeholder expectation. You are trying to fulfill the expectation of all stakeholders under this. Then the fourth one is shape of society. Shape of society. That the best level you can have as an organization. Here, number one is given to the society. Our main objective is to satisfy society requirement. Financial consideration will come second. At the best level you can go, no? Right? Look at the stages you can have. Initially you look at about only the shareholder short term interest, then second one you try to manage the stakeholders to give a better return for shareholders in the long run. Third one we look at about the expectation of all stakeholders, that is more broader. Fourth one, society is the number one. So that is the best level you can have, no? Right. Then Carroll pyramid, CSR Carroll pyramid. So what Carroll did? Carroll tried to identify organizational responsibilities based on their relative importance to the survival of the business. Based on the relative importance of survival purpose, Carroll identified 4 responsibilities and he put them in a pyramid. you know how to read something in a pyramid. It indicates bottom part is more important than the upper part. No? When you go along with the pyramid, when you go up actually along with the pyramid, the important reduce. No? When you go down, other way happen, the important increase. So, according to Carroll pyramid, there are 4 responsibilities. The first one is economic responsibilities, second one legal responsibilities, third one ethical responsibilities, fourth one philanthropic responsibilities. This is according to the level of importance of them to the business survival. Business survival point of view, the most important responsibility according to Carroll is economic responsibility. Without fulfilling, you can't survive even in short run. Economic responsibility mean be profitable, you want to make profit. From shareholder point of view, this is the number one requirement. Therefore, organization is having a responsibility to fulfill this. Then the second important one is legal responsibility. Adhere to the laws and regulations. In short run, you can survive by violating this, but in long run, you can't survive. For example, defaulting EPF payment. In short run, you can survive, but in long run, Labour Department people will take actions against the organizations. Then the third one is ethical responsibilities. Ethical responsibilities, that is not important like economic and legal responsibility, but that is more important than the philanthropic responsibilities. Now you know what is ethics. Ethics concern about what is right or wrong. For example, avoid labour discriminations. When you are recruiting people, you should avoid labour discrimination. You should not discriminate women from men. That is ethical responsibility of the organizations. At the same time, organization is having a responsibility to pay a fair salary to the employees. Ethical responsibility. Then the fourth one, that the least important one, that is called philanthropic responsibilities. Philanthropic responsibilities. In other words, this is social responsibilities. Giving something back to the society. This is the minimum, or this is the least important responsibility in terms of the organizational survival. If you ignore this, still you can survive in the society. Then what are the approach to social responsibility? There are 4 approaches to social responsibility: proactive, reactive, defense and accommodations. Proactive means you will give the priority to CSR activities. A strategy which is a business follow where it is prepared to take full responsibility for its actions. Here you give the number one priority on CSR activities. For an example, recycling. You think about the environment, you recycle the garbage. That is a proactive strategy. No one asks you to do that, but by thinking about society, you do that. Reactive is the opposite of the proactive. This involves allowing a situation to continue unresolved until the public, government or consumer group find out about it. You do something bad, for example, you pollute the environment, but you are not doing anything to avoid that. You wait until public, government find it. That is bad approach. Why it's bad? You deny or ignore the responsibility in here. The defense strategy, what defense strategy? Here you try to minimize so avoid additional obligation rising from a particular problem. Depends, right? So you put up a fight with different parties. This is little bit better from the reactive strategy. Accommodation strategy. So assuming social responsibility only in response to pressure from interest group or the government. Until someone pressurizes you, you are not doing anything, but when someone pressurizes you, you do it. That is a relatively good approach compared with reactive and response strategy, but right, not good compared with the proactive strategy. Proactive is the best. You can understand that from next slide. Look at that one. Look at the degree of social responsibility. So what is the highest level? Proactive, no? Because without telling someone, you proactively take the actions. I gave an example earlier, that recycling. This accommodation also relatively good approach. When someone tell you, you start to adhere to that. Depends on, still you try to fight that part, you know. The low level. The lowest one is actually reactive approach. Still you are not accepting. Deny or ignore the responsibility. Right. Then topic number 5, approaching ethical scenarios. This was newly added to the CA syllabus, but if you look at the ACC syllabus, you can see the same thing. So we have also incorporated that one, approach to ethical scenarios, right. So here we are trying to use some model to deal with different ethical scenarios. There are two popular models we can use for that. One is American Accounting Association model, very famous, AAA model. We call it as AAA, AAA model. Then Tucker's 5 question model. So we will look at about each model. I think from the exam point of view, this can be target actually. There are few reasons for that. One is newly added. Second one is, in a case study questions actually this type of model can be easily tested, right. As a part of the case study question, this can be tested, right. So first of all, we look at about the American Accounting Association model, AAA model. So here actually there are 7 steps to be followed. So what is the steps number 1? What are the facts of the case? So here the objective is to identify what is the issue, right. You write what is the issue here. Then number 2, what are the ethical issues in the case? So what are the ethical grounds in the case? So it should be based on the facts. Number 3, what are the norms, principles and value related to the case? Now, in relation to the matter we are concerning, we look at about what are the applicable norm, principle and values related to the case. For example, as professional accountant, you have learned certain principle, ethical principle accountant want to adhere. You look at about from that, right, what can be applicable for the issue, right. This means placing the decision in social, ethical and professional behavior context, including considering professional code of ethics or social expectation of the professions. Then number 4 is what are the alternative courses of actions? What are the alternative courses of actions? Here we try to state each course without making reference at this stage to the norm, principle and values to generate ideas, consider the issue from the point of view of the guilty party and the organization. Here we look at what type of action we can take in this scenario. Different alternative actions are identified. Step number 5, what is the best course of action that is consistent with the norm, principles and values identified in step number 3. Now, you know what are the principles applicable, code of ethics applicable. Based on that, you are trying to identify the best alternative you can take. Combine step 3 and 4 to see which option accord with the norms and which don't. The number 6, what are the consequences of each possible course of actions? By taking each actions, what type of consequence you will face? This ensures that each of the outcome are unambitious. Then number 7, what is the decisions? That is the final one. What is your final decisions? So, I will take a small example to go through this process, all 7 steps. For example, suppose you are an auditor, you are an external auditor. When you are doing an audit in a client, you found a suspicious transactions. You question from the client. Question was silent. You insist and ask what is that? This material amount. Then at that time, client try to bribe you and ask not to disclose that one and offer a huge amount for you. This is a scenario. Now, if you look at about this one, what are the facts of the case? Now, material transaction is there, it's doubtful, you found something maybe a bribe given for some party and client want to avoid this and he is trying to bribe you now also. Now, number 2, what are the ethical issues in the case? Bribe is not taxable, that is the first issue, right. Then the second thing is he tried to bribe you, that also not taxable act. The third one, what are the norms, principles and values related to the case? You look at about some of the laws like bribery laws, then you look at about your own principles. As accountant, what you have to do? Objectivity, due care, integrity, those are some of the principles you have to look at, no? Right? Applicable in this scenario. Then number 4, what are the alternative course of actions? Now, you have 2 options. One is disclose that problem in your finance statement. Second option is silent, not disclosing it, accept the huge money offer for you. 2 options are there. Number 5, now you go to the principles, ethical principles and the laws and you try to evaluate 2 alternative with that. You check what alternative in line with those norms, right. Number 6, you look at about the consequence of each possible course of action. For example, if you disclose this one, that will affect the reputation of the client, right. That is one of the consequences which can happen, and not only that, so you also be affected. Why? Client may right remove you as auditor. The second option, accept the bribe, right. Company image will be protected, but it later if that is found, then auditor will face legal consequences in the future, and at the same time it violate your basics, values and the norms as auditor. What are the decisions? What are the decisions? As auditor, you in line with those steps, especially norms and right values you have, ethical principle you have, you may take a decision to disclose that material transaction which is identified as a bribe in the financial statement. Not only that, you may mention about trying of client to bribe you also. I think now it's clear for you about the model. Then we will move to Tucker's 5-question model. It is very simple one. There are 5 decisions you have to make, right? So, you have to raise 5 questions actually. That is why it is question model. Is it profitable? Is it legal? Is it fair? Is it right? Is it sustainable? Right. We look at about each one. First one is profitable. Look at the comment. Compared with what? Use of profitability as criteria also imply the Tucker model may be more useful for business decision than for individual moral dilemmas or dilemmas, right. So, here normally in a business case, number one thing you are looking about is whether it is profitable or not. No. The legal, second you look at about whether it is legal, whether it adhere to the law, your decisions. Third one, is it fair? Taking such decision is fair, right. Then is it right? This depends on the ethical position. Such decision is right. Then the fifth one is sustainable. Is the decision environmentally sound or sustainable in other ways? I will take another example. Suppose there is a foreign country, you can go there and do the business. You say this is a third world country. There the rules and regulation is very minimum. Even environment pollution, there are no strict laws, right. So, you are trying to take a decision whether you are going to that country or not. In that scenario, you will raise these 5 questions. First one is whether profitable. You do a financial analysis and you found you can get a lot of profit by going to that country. Legal, in that country, so your business is accessible, there are no legal problems. Fair, that is fair decision in that country, right, government need investment, at the same time there are a lot of people who need jobs, fair decision. Right, right, yes, within that country laws, according to law, right, there are no violations, there are no ethical one even though you pollute the environment. So, they accept your polluted level is acceptable level according to that country, therefore, it is right, no issue. Sustainable, yes, environment is sustainable within that particular country, there is no issue. Right, with that we can complete topic number 4.